just from a disclosure standpoint, we're not providing any investment advice today. This is all for educational entertainment purposes only. This is SRM's Tech Talk, and for those that aren't familiar, we kind of cover topics at the intersection of traditional finance and emerging technologies. For those of you who've been with us for a while, and we do this forum every other week, we've done it pretty religiously now for about a year and a half or so under the Tech Talk brand. But prior to that, we did this under a brand called Crypto University. So that should give you, Sarah, an idea of just kind of where some of our interests lie. Today, for the folks on the call, we have Sarah Milby, who's the head of policy for the Blockchain Association, which I've got a ton of respect for, both for Sarah as well as the association. And what I'd love to do today is to have her kind of talk about how the industry interacts with our legislators, the things that they do around education, use cases, engagement. As many of you know, there's a growing voter bloc where crypto is kind of a single issue for those voters. And I think a number of our politicians are starting to understand that. Being in traditional finance, we kind of come at this from a different angle, both see digital assets and cryptocurrency as a threat and opportunity, but certainly the underlying technology, blockchain, digital ledger technology, is something we're all very excited about. This is going to be a fun tech talk because it is an unbelievable busy week. I won't steal any of Sarah's thunder, but there is a ton going on. Just highlight some of those is, for those that have been paying attention, we had the anti-crypto FDIC chair, Martin Gruenberg stepped down or agreed to step down after facing some criticism from both Republicans and Democrats. There was a bill that recently passed both the House and Senate, SAB 121. Sarah will talk about that. There's one that passed the House yesterday, which is a Fit for 21st Century Act. I think we are waiting on, apparently today, there's also a bill about an anti-central bank digital currency to pass the House. We're waiting on news from the SEC that will probably come while we're on this tech talk to decide whether or not they're going to allow ETFs, ETFs, and then there's a ton of other things going on. So with that, I want to introduce Sarah. Sarah, I want you to, if you can tell us a little bit about yourself, your roles and responsibilities, what is the Blockchain Association, and what's the path you took to kind of get to your current role?
Yeah, definitely. Thanks for having me on. It's good to see everyone on the webinar. Sarah Milby, head of policy at Blockchain Association. Blockchain Association is a Washington, D.C. based trade association. So we represent about 100 companies who are all, we call them crypto native. So their bread and butter is all from crypto services, digital asset services, innovating on blockchains, et cetera, especially public blockchains. And they really span the gamut from big centralized exchanges to small DeFi developers and custodians, et cetera. So we represent a large swath of the crypto and digital asset industry. What the association aims to do is educate policymakers and lawmakers, regulators, the courts, et cetera, about the technology and how it works and how traditional regulation can't really be imposed on the space in the same way that regulation is existing today for traditional financial services in particular, but even I think larger than that, really educating and highlighting the nuances of our technology, how innovative it is, and trying to make sure that everyone's on the same page as we approach a new regulatory space and trying to figure out which regulations make sense and what don't, how do we tailor them to fit the technology itself. So I'd say that's probably our main goal. We do a lot of advocacy on the Hill, so we educate different policymakers, specifically House members and senators. We've engaged with the White House, agencies like the Securities and Exchange Commission, the CFTC, et cetera. So we're really kind of rolling all over Washington, D.C. and the Hill, but it's been a wild ride the last few weeks, which I'm sure we'll get into. And then for a little bit about myself and my role as head of policy, I oversee our policy development. So particularly in legislation, when any new legislation comes out, it's my duty to read it and try to understand how it would impact the industry, and then figure out if there are potential solutions that we can create and suggest, or if things need to be struck, et cetera. If we can support different things, all of that kind of falls into my bucket. And we really try to deploy the resources we have on hand in order to try to make the bills as best as possible before they get put into law. So that's a lot of what I do. I also do a lot of research and messaging, kind of communication about the issues, trying to make them more understandable for members of Congress in particular. So sometimes I describe myself as a translator. I feel like I take one language, which is the language of the developers and our industry, and try to translate it into the Hill staffer language, which is quite different. And how I got into the space, it really started, I was in high school and actually went to Madagascar for a summer. I spent 6 weeks there. And bear with me in the story, but long story short, I did a homestay with someone and tried to return the favor and have her stay with me in the United States, and was talking to her on Facebook every day, but couldn't send her money. It was impossible. She didn't have a passport, and I was trying to send her money so she could get a passport, and it turned into this whole thing. And I was so confused about how could I communicate with someone so easily over the internet, but not be able to also send them funds. So that kind of started my interest in this space, and I followed it. I wrote my thesis in college on the regulation of crypto by the SEC in the ICO crisis, or ICO times, really, and have just been in the space ever since.
That's awesome. They used to call crypto in the early days internet money, right? And that was the idea, is that we can communicate electronically with anyone anywhere in the world instantaneously. Why should we not be able to send money the same way? And Satoshi kind of helped us along with that back 15 years or so ago, and it's been a wild ride. How many people work there, the Blockchain Association? I know we know a number of folks. Ron Hammond is always we're a big fan of Ron and some of this work he's done. How big is a group there?
I think we're about 17 full-time now, so fairly small.
Okay. And you serve is it only U.S. institutions or only U.S. kind of crypto industry folks, or are there international ones that you guys serve as well?
So our members have to have a significant U.S. presence, so
Okay.
Mostly U.S. companies.
Got it. Okay, so one thing did want to get into was if you could maybe provide us an update on some of the major legislative efforts that you guys have been involved in. We've seen the last week and a half or so ago, kind of what they are, why they're important, next steps on some of those, but some of them are pending. I don't think we've seen anything go the whole way to law yet, but we're getting a lot closer, right? And that's a big difference from where we've seen and all the fighting you guys have done to get us where we are today. Is very different than what we saw, say, a year or two ago.
Yeah, definitely. So I think the biggest one and most notable for this week in particular was the passage in the House of the FIT 21 Act, which is a market structure bill. So it's looking to create more clarity for the differentiation of token status between when it's a security and when it's a commodity, and whether the SEC or CFTC should have jurisdiction over the trading of those assets, how they were fundraised, how they were distributed, what's the custodies or front running restrictions, et cetera. So it's really trying to put in place a much more clear and comprehensive framework for the trading, custody, and just general regulation of digital assets here in the United States. It's a fairly comprehensive bill. It's like 180 pages, I think. And it does a good job of trying to exclude DeFi from being caught up in centralized regulations. What that looks like in the Senate, I think it will be hard to tell. That's the next battle for that bill to face. But we were really excited by the passage of the bill because it had overwhelming bipartisan support. Over 70 Democrats actually voted yes in support of the bill, in addition to over 200 Republicans. So it was a really great showing, I think, and really was a landmark moment on Capitol Hill, showing that people understand that there are issues in the crypto industry when it comes to a lack of clarity and regulation, which I think is important, and that crypto is here to stay. Like the fact that Congress is even considering a crypto bill so comprehensive, I think is a really big step in the right direction for securing our place in Washington. And as an official kind of advocacy landscape, I think it's been important. So that's the first one.
How big of a deal is it for a bill like FIT 21 to move, like we've seen a lot of things debated in committee, but to move out of committee to a floor vote. Yeah, I mean, obviously in the House, and then I guess it's going to go to the Senate, and then I understand how laws are made, then it goes to the president. Like, how big of a deal is it to move out of committee for a floor vote and then to pass the House? And is this the first major or only crypto bill that we've seen get to this point?
Yes, it's the first and most major by a long shot. The only other bill that's gone through the process was actually a tax bill. It was the Infrastructure and Jobs Act. That had a big provision in it, which we'll probably cover later when we talk about tax issues. But that's the only other bill that really touches crypto that's moved through Congress. But that was mostly focused on other things, whereas this bill is solely focused on crypto. So it's definitely the first and first of its kind to move through the committee and then even be voted on in either chamber.
That infrastructure bill, that was the one that was passed, like, that goes back maybe 2 years ago, and there was a big last minute push from the crypto folks that realized there was a little bit of language that I think maybe Treasury's proxies or someone had put into the must pass bill, and it was, I think the idea was to collect tax on from crypto folks, but we'll talk about that here in a bit. So yeah, so we had the FIT 21 Act passed the House. What's the next step? So it goes to the Senate. I think I've heard that maybe Gary Gensler has already been kind of talking to the Senate. I think maybe the CFTC has also been kind of making their case, because I believe that bill makes provisions to kind of separate out, like, at what point is a digital asset a security versus a commodity, and maybe it could start as a security and then based on decentralization becomes a commodity. So there's two kind of competing fractions that are looking for oversight, right? And so what's the next step, and how likely is that to maybe to pass the Senate?
Yeah, I think that bill has a long and steep road ahead of it. I say that for a few reasons. The first is, I think that, to your point, with the split jurisdiction between the SEC and the CFTC, it also requires two committees in Congress to approach the bill and to understand it. So one committee in Congress generally oversees banking and other financial services, while the agriculture committees oversee the derivatives and commodities trading space. And that's just a function of how the US has decided to regulate our financial markets. We have two regulators depending on the assets. And since crypto can kind of look like securities sometimes, maybe in some cases or forms, especially to people on the Hill and according to the SEC, and look more like commodities at other times, people have decided, at least on the Hill currently, that it makes more sense to try to have two regulators, which is the way that we see the structure and fit. That might not be actually the end goal. Like, that might not be the best result that we could all hope for. I think a unified market would show probably better liquidity and pricing for the assets themselves, and would probably be more interoperable with global markets, which are generally a single market and not split up in the same way they are in the United States. So I think that kind of topic in particular will be one that has a large focus going forward. But just beyond that, like, there's a pure political side of this. This is not just kind of a policy question for bills. It's got a long political road ahead of it as well. And whether or not the heads of the committees will decide to take up the piece of legislation is one question. I think there are some headwinds from the agencies that could influence the Senate and their take on the bill as well. And then finally, and might be the most important thing, is there are only 50 legislative days left in the year. So there are very few days, and there are a lot of things that still need to get done, including the Farm Bill, which is a pretty big deal. Generally, it's like every 5 years they have to pass a new version of the Farm Bill. So that will keep the Agriculture Committee particularly tied up through the end of the year. And there are some other pieces of must-pass legislation. So I don't think this bill necessarily is a priority of Congress, especially in the Senate, to get done compared to some of the other priorities before the year's end.
So how many did you say of Democrats kind of crossed the aisle to join the Republicans at the House to pass this bill through the House?
It was 71.
Wow. So, I mean, that seems, in today's polarized political climate, to be a fair number, and I get the question I've got for you is, do you think that there's a general recognition among politicians that this crypto thing may be bigger than they initially thought? Is it they're understanding the issues better? Is it that those that are crossing over are younger? Like I heard someone say that it's not so much as like, because for a while it seemed like crypto was getting polarized and falling to different camps, but I heard someone describe that it's really not. It's more generational, and I'm wondering, and I don't know who voted on what, but I'm wondering if some of the ones that crossed the aisle tended to be a little younger, understood it, maybe went through the financial crisis of 2008 and saw the impacts of that and thought maybe there's a better way. Well, what's kind of changing this, what feels like a little shift in Congress?
I think part of it started with the Staff Accounting Bulletin 121 Congressional Review Act vote, which for shortened terms is the SAB 121 CRA. And the SAB 121 CRA was voted on through the House and Senate this year. So it passed both chambers, which is a huge accomplishment. And there were over 10 Democrats, or there were 10 Democrats that voted for it in the Senate. So that's about 20% of the Democratic caucus in the Senate voted for the bill, and there was House support as well. I think that really started to set the tone that, okay, there are Democrats who are amenable to voting for a bill, even despite the fact that the president issued a notice saying that if the bill was passed, he would veto it. So we're still waiting to see whether or not he will veto the bill. But I think the fact that some members were committed enough to passing the SAB 121 Act, I think has really changed the tone and opened up the opportunity for other Democrats to become more curious in the issues. Out of the 70, most of those people who voted weren't necessarily on the Financial Services or Agriculture Committee. I think these are people who are new to crypto issues, taking a new look at our space and the types of issues it's facing in general. So I think generally they're younger folks. I think that's been true across the board. I think people who grew up with the internet a little bit more intimately are better familiarized with crypto and how it works and the different types of unique aspects that it has compared to traditional finance and intermediated spaces. So I think those people were particularly interested in the kinds of issues that the bill tries to address. But it'll be interesting to see going forward, especially in the Senate as well, if the demographic changes or how different folks will try to approach the same issues there.
So that SAB 121, which is, if I understand correctly, is a staff accounting bill that the SEC issued, that both the House and the Senate voted to strike down. Can you talk a little bit about some of the issues there? What was the goal of that initial staff accounting bulletin? Who did it impact? As I understood, impact banks and their ability to custody and what would have been required of them. Can you talk a little bit about why that was important and why Congress said, all right, like maybe was this an overstep by the SEC? Was it, maybe you can talk a little bit about some of those issues.
Yeah, definitely. So SAB 121 was passed a few years ago and it was just put out as guidance by the SEC. And essentially what it said was public reporting companies needed to have certain accounting standards and practices related to digital assets that they had custody of and count them as liabilities on the books rather than assets, even if they were in full possession of them, they didn't belong to customers, et cetera, which is quite different, I think, treatment from other types of assets and GAAP accounting standards. And the Government Accountability Office, which is an office that can sometimes be called upon by Congress to check whether or not certain staff accounting bulletins like SAB 121 or other guidance were put out correctly, or if they're actually rules and should have gone through a full rulemaking process, which is a separate procedure and much more involved and requires public feedback and comment, et cetera. The GAO, the Government Accountability Office, ruled that SAB 121 was actually a rule and should have gone through the rulemaking process, and it was wrongly put out as guidance. So that's where a lot of the genesis for the Congressional Review Act comes in. The CRA gives the Senate and House the opportunity to repeal different types of guidances or rules that are put out by agencies. And so since this one was wrongly done and the SEC didn't seem like they were willing to go through the full rulemaking process, there are a few senators, Lummis and Gillibrand in particular, who wanted to try to support the repeal of SAB 121 since it made it much more expensive, especially for banks, to hold on to digital assets and custody them. And so for that reason, I think it's had an easier time moving through the House and the Senate, because you can point out that SAB 121 was done wrongly. You know, our own GAO office like agreed with us on this. And not only that, but it's got all these other policy issues. And I think that really struck a lot of different members. And especially because I don't think it's unique for this particular SEC to have done things flying, I think, opposite to what the norm is, or that might seem more aggressive than normal, et cetera. So I think it was an opportunity to have a little bit of a referendum and check on Gary Gensler's actions in the digital asset space. But it also, I think, has been a good opportunity to repeal something that is actually quite harmful to those who are some of the best positioned to custody customer assets.
Yeah, and those are big banks. I think US Bank was one of them. And the idea of custodying assets on behalf of a customer, I always looked at it like you're holding those assets on your customer's behalf the same way you would hold items in a safe deposit box. So think of like a digital safe deposit box. Well, those don't sit on a bank's balance sheet. There's no need that they have to hold collateral for those. The idea that suddenly you got to hold those on your bank's books and have matching collateral for that never made any sense. So it seemed like it was a bad rule to begin with, but I'm excited that at least the House and Senate saw that maybe just procedurally it wasn't done the right way. What are the next steps moving forward, right? Because it goes to the president's desk, and I think he has a couple of different options. I think he can veto it. He can kind of do a pocket veto. I think maybe they could reconsider. SEC could reconsider it, or could just back away from the ruling to begin with. What do you think the chances are? Like, what's the most likelihood that that's one of those are good? Well, one of them is going to happen. What do you think is going to happen?
Yeah, it's a good question. I think before the Senate voted on it, I would have said, okay, even if it passed with a little bit of support, like 1 or 2 Dem votes, he would probably still veto it. But after 20% of the caucus in the Senate voted for it, I think it's a little harder. And, you had the 71 Democrats vote for the Fit 21 bill this week. I think there's a stronger showing in the party for support in the crypto space and taking the issues that are raised about cryptocurrency, digital assets, blockchains, et cetera, a little bit more seriously from the administrative side. So I'm hopeful that he will reconsider the veto. I don't know what's most likely at this point, if I'm being honest. I think he has a 10-day, there's kind of a shot clock that starts to count down. It hasn't started counting down yet, but it probably will soon. And within those 10 days, that's kind of the window of opportunity for the president to veto or sign the SAB CRA into law. So it'll be interesting to keep an eye on it, but I don't know. I wish I could tell you, but it's probably, I don't know what's more likely right now. I think it could go either way.
Yeah, I tend to agree. It's interesting. I felt differently leading up until the last couple of weeks, but it does seem to be a change in the tenor of like Congress and politicians. And I think some of that's being driven, and again, not to get political here, but obviously it's an election year. And the former President Donald Trump is now courting crypto fans, and whether or not you believe he's honest about that or not, I'm not going to debate that. But we know the current administration, I think most people would agree, has not been that friendly to the crypto industry, and some of it probably rightly so. I mean, we have had some frauds and whatnot. And then RFK Jr. has also been courting crypto fans. I'd say he even beat Trump to the starting line on that. I think he's speaking at Consensus 2024, which I'm going to next week. Are you going to that one?
I won't, unfortunately. I'm going to Dublin next week, which I'm excited
about. Yeah. I think there's a general recognition that there's like crypto super PACs that are poised to spend more than $80 million to influence Congress and secure friendly policy. So I think all of the stars are lining up a little bit that the Dems in an election year feel like maybe again this might be a bigger voter issue than they had planned on. Moving away from the politics for a second, there were also I know early in the year, there were some discussions at the House level and maybe even as a Senate level around stablecoin bills to address some of the regulatory uncertainty around those. And as for most of those on the call, but anyone that doesn't know stablecoins, at least where we talk about them today, algorithmic ones aside, are these kind of digital representations that are backed fully by like a currency, usually US dollar. What's the latest on stablecoin legislation? Is that something that's still popular? I think Maxine Walters, she was in the House, right? Or she was in the Senate. She's in the House. Yeah, I think she had a particular brand on it. Some of the folks in the Senate had particular brands, and it was looking like last year some of that was going to match up, and then things got pushed to the side. Like where's stablecoin regulation kind of fall? Because that seemed to be a big talking point for the last year and a half, and I haven't heard a lot of it as of late. But there's been these other kind of crypto issues that have taken the spotlight.
Yeah, I think it's definitely still something Congress is interested in doing, taking action on, especially because there have been separate efforts in the House and the Senate to address creating new stablecoin legislation. So Senators Lummis and Gillibrand have put together a proposal that they released this year, and House members I almost called them McHenry and Waters, but it's kind of a cute like couple name for them, maybe. The two of them have also been in works on a stablecoin piece of legislation that was voted out of committee last summer along with Fit 21. It will be interesting, I think, to see both chambers try to reconcile the differences between the bills because they are quite different, that in the Senate and that in the House. I think that there's still a lot of negotiations happening. I think there are some open questions on the role of states, for instance, and the ability of states to oversee stablecoin issuers and how much the federal government should also have the ability to intervene or oversee those different activities. I think there are also questions about what the reserves are, et cetera. So I think that there are a few things still being discussed, and I think the administration has also become more involved in those discussions as well. So I think they've slowed down a lot, the talks, because I think there are some really big issues that they're trying to work through. I think it's kind of still out, like whether to be seen if we can reconcile the differences between the two sides and find a kind of middle path.
About the stablecoin likelihood of stablecoin regulation in the House and Senate, and kind of recognition that that's something that needs to get done. I was wondering how much the Treasury and maybe the Fed have been involved in conversations around that as well, because my view on it is it does have some serious geopolitical implications for the US dollar. Has that been your experience? Is that Treasury and Fed are also playing a keen role in this, or key role in this?
Yep. Yeah. I think they've a lot of interest in the outcomes, and especially because of the interest of the dollar. But even that, I think a lot of it has to do with like almost like pseudo banking product and creating a new dollar linked asset. And how are you keeping reserves to make sure that it can maintain that peg? It's a tricky business, and especially with the amounts of bonds that are owned by some of these issuers of stablecoins, they're quite large in number, and so there is a significant concern with them being tied up as collateral, I think, in reserves as well. So they're walking that line, I think, fairly delicately, and want to make sure also that people are able to be made whole if the stablecoin issuer goes under, which we saw the Terra Luna collapse, and that was an algorithmic stablecoin. So it's quite different from some of these collateralized stablecoins. But regardless, I think there's still a concern that we want to make sure that at the end of the day, there's enough consumer protection should an issuer go down for whatever reason, that people can be made whole at the end.
Yeah, or even if a stable coin like Coinbase that happened to have US dollar reserves in what appeared to be a pretty stable financial institution, that financial institution fails and $2 billion of their reserves get locked up, right? That's where, the links with traditional banking system can sometimes play against them. So that's interesting. So I checked my Twitter feed. Maybe that's why something happened with the audio. I was looking to see if they had approved, any news about the SEC approving an ETF, because what certainly appears to be a change in direction. The US SEC has asked the exchanges in recent days to fine tune their ETF filings, which was taken by the industry and at least one Bloomberg analyst as a really positive sign for approval. I think I forget the guy's name. I listened to him on a podcast earlier, but he'd switched his odds of approval from 25% to 75%. Now, granted, it's one analyst, but I think there's a lot of people in the industry feel like, okay, there's a lot of positive movement, and it's looking very much like the same sort of thing that happened prior to the Bitcoin ETFs being approved, where there was this flurry of activity and asked to kind of clean up some of the filings. What do you think the likelihood of that getting approved, and how do you think that might impact the market? Not necessarily from a price standpoint, but from an adoption standpoint. Would we see other ETFs eventually get approved? What's your thoughts around that?
Yeah, I mean, I think I'm the type of person when it comes to Gary Gensler's actions that I'll believe it when I see it when it comes to crypto. So I'm a little skeptical of it getting approved without any kind of litigation happening or even any kind of more political pushback, et cetera. But I think Gary Gensler might be feeling the headwinds a little bit more and him maintaining his kind of anti-crypto stance in many ways. So it could turn out that he sees the winds are changing and he really needs to kind of hop on board with the administration, which is taking a more open view to digital assets and trying to protect consumers. And I think there's no better way to create. I think this is to answer your question about how it will impact the market, but I think the more options people have to be exposed to digital assets, it will be helpful for them to have those different options. I think options are always a good thing. And I think Gary Gensler said the same. The more optionality and competition you have in markets, the better for the consumer. So I am hopeful that they see the ETF as a great way for individuals who want exposure to crypto, because there are people who do. Millions of Americans already have exposure, but it just gives them another avenue and path to be able to access the asset, especially in such a way where they don't have to worry about the custody or even opening up a new account. They can work with their brokers who they already have an existing relationship with to now access this new asset class. So I'm hopeful that it will increase adoption, and I think will in many ways secure ETHs, especially if it gets approved. It would secure Ethers. The belief, I think, of industry and others that it's a digital commodity. It is not a digital security, which I think is still a big piece of, there's a turf war happening between agency regulators right now. So to the extent that we can put that to bed and really allow Ether to be a commodity, I think would be a huge step in the right direction and providing a lot of clarity to the market, and securing, different assets even that have had a similar kind of lifetime trajectory to Ethereum.
It's interesting with Gary Gensler, being a President Biden's appointee, but it does appear that he's starting to get a lot of pushback, even from the Democrats, around some of the decisions he's made. Elizabeth Warren, who also is kind of had very much anti-crypto crusades, starting to see a lot of pressure from her own party. I mentioned earlier the FDIC chair, Martin Gruenberg, who's stepping down. A lot of people may not be familiar with kind of his role, but his role was very much in this kind of choke point. Crypto calls it choke point 2.0, but like this choke point, the idea of weaponizing the banking industry to prohibit what could be what was legal activities, but activities that weren't deemed by whatever the current the administration was, right? So back, I think under Obama, it was guns and maybe coin dealers, couple weird things where they kind of choked off financial access for those industries. And then we saw the same sort of thing happen with this administration around crypto. So it does feel like the tides are changing. A question I have for you is, how much do you think that is, one, this election year and younger people are still very much in tune to crypto, but I think through a large part of the efforts of your organization, our legislators are getting educated on this, and that it is a voter issue, and that there are still probably 20% of Americans that hold digital assets, and we know that Americans tend to vote with their pocketbook. But we also saw, a number of big public failures in the crypto industry over the past couple of years, and we recently got the sentencing of Sam Bankman-Fried and CZ of Binance. How much do you think that sentencing of those two individuals, and again, they were very different, and I think the crypto industry views those as very different situations, but how much of like, is that getting it kind of water under the bridge and now we can kind of move forward? Like, what's driving this change in approach and again, what I call general tenor?
Yeah, it's a good question. I mean, I think one thing that definitely helps is when prices go up. And since the Bitcoin ETF was approved, we've seen a big increase in prices across the board for many assets. So I think to the extent that some people were holding on and have been holding for a long time, so to speak, that they are seeing their investments increase their value over time. I think they feel more comfortable. And I think others who might have seen the market crash after events like FTX, et cetera, have seen a rebound of pricing. Maybe they're feeling more comfortable with the market again. That's just from a price perspective. Otherwise, I'm hopeful that people think that many of the bad actors have been kind of weeded out over the last few years since the collapse of FTX, and that going forward, there's been more scrutiny, especially from regulators over the industry, and that's provided a safer operating environment for the companies who are providing services to them in the space.
Yeah, I was going to look up the current Bitcoin ETF holdings, and it's huge. I don't know exactly what it is, but I think it was like 50 or 60 billion, which is kind of what my estimate was for the end of the year. It's already there. So those were wildly successful. It'll be interesting to see if the ETF approvals of ETH, if that happens, if that changes any of the interest in Bitcoin, or if it's just, we just see more float across the board. So one of the things that you specialize in is taxes and tax regulation, tax policy. I'll be honest, I'm not much on understanding the tax implications. I followed some of the things over the years in the way that, digital assets are accounted for from an accounting standpoint. Maybe could you talk a little bit about what are the things that you're aware of that we should be looking at as an industry? What has changed? I think you mentioned one of the early legislative efforts, which was to try to tax crypto in that infrastructure bill. Maybe you can talk a little bit about that. So maybe address some of what the industries should be aware of from a tax standpoint.
Yeah, I mean, tax is hugely important. I think it's kind of one of those less sexy pieces of policy, but it has a huge impact on the different parts of our industry. And in particular, I think a great example is the Infrastructure and Jobs Act, which had a provision that would expand the definition of who is a broker in the tax space, which is different from a broker in the securities and space, who brokers are and have to do, like which individuals need to do information reporting on crypto transactions. It would expand it to a very large group of individuals. And so the IRS proposed a rule, like their interpretation of the Jobs Act, which was passed, and essentially said that unhosted wallets they thought might be brokers. So those who are self-custodying their assets for some reason, they thought like someone who provides software or even hardware should be able to figure out who the individual is, who bought the software or hardware, who's using it, what price they bought the assets at, what price they sold the assets at, what kind of other like transactions they're participating in. So if they need to be sending information to another broker, like a broker to broker transfer of information to keep track of the cost of the asset over time, et cetera. So there are a lot of like complications to the broker rule, but in general, I think it's a really big threat, particularly to the decentralized part of the industry. But even beyond that, I think centralized exchanges and others who do have kind of information, or a lot of the information at least, to help with tax reporting with individuals who, when they're conducting crypto transactions, there's still a lot of lack of clarity, and it takes a lot of time and money, honestly, and resources to build these kinds of tax systems. So that'll be an interesting thing, I think, to watch out for moving forward, and could lead to a lot of problems in the industry. So we're keeping a very close look at that one in particular. There are others which I'm happy to get into as well.
that interpretation around unhosted wallets, I know got the hair standing up on the back of a lot of people's necks. It's particularly because I think the FBI also put out some guidance around that, but maybe it's Department of Justice. And I think it was more geared towards mixers that were associated with unhosted wallets. But I think the crypto industry said, hey, wait, could this be broader where they could crack down on unhosted wallets in general? And does that force me, if I hold assets on an unhosted wallet, do I have to move that back to a centralized exchange? Or then am I doing something illegal if I'm using that, or I send that money to a cousin, or I send crypto to a cousin? Like that, there's a lot of unanswered questions that I think need to get resolved. And I'm hoping that does it at some point, but I can't imagine that the tax implications and complications of this stuff seem pretty significant.
Yeah, and I think it affects all parts of our ecosystem because it would be any digital asset to digital asset transfer. So changing one token A for token B, even if it's a stable coin for another stable coin, there's no difference in the value of that transaction. Every single one would be a taxable event. And so I think the IRS estimated that it would get 8 billion, like with the B, billion forms every year from the types of reporting that it's asking individuals to do, which not only flies, I think, in the face of Paperwork Reduction Act, which is basically a law in the books that says you should try to reduce burden and the amount of reporting for people as is practicable, and only take the information you think you actually need and to do your job and to get to whatever goal you need. And so for that reason, I think there's just like a lot of complication in terms of the actual way that this will work in practice, how the IRS will try to digest that information. I don't think they have the staff or the resources to actually make a coherent kind of understanding and to be able to track down the people who are really, I think, flying in the face of tax evasion, if there are any. And I don't think it's really taking advantage of the blockchain itself. I think there are a lot of interesting tools that could be developed to help with tax, like helping increase the amount of people who pay their taxes by looking at what's happening on chain, et cetera. So I think there are other ways, I think, to tackle the issue other than to try to identify every single person behind every single wallet and do reporting the transactions and their information for every single transaction that happens.
Appreciate that answer. One last question I've got, and then I want to open it to questions from the audience. And again, not taking a political stance one way or another on this, but after the Israeli attack, there was some reporting that Hamas had gotten all of this money via crypto, and one particular senator was really pushing that narrative in Congress. And then I think eventually a couple of the on-chain analysis companies did some research and was like, no, that nowhere close to that number really wasn't used for terrorists. And we've heard that narrative before. And sometimes it feels like they put a headline out there and then, going back and trying to correct that headline after the fact has got to be a nightmare. And I imagine that's part of the work that you guys do in terms of educating folks. Is there a general consensus around Congress that people are getting the idea of like, what is this useful for, what it's not useful for, that this isn't all used for terrorism, that most terrorism prefers cash? How's the understanding of Congress shifting over the last year or two? Because again, you guys have done a lot to shift that narrative.
Yeah, it's definitely one that we are still actively trying to shift. I think once a headline's out, it's a little hard to undo the damage of the headline in retrospect. I think a lot of those who are already fairly deep in our issues on the Hill, whether it's staff or the members of Congress themselves, really understand our educational efforts and our point of view. I think it's really the kind of lesser educated majority of members where we still have the most work to do. And I think as time goes on, there will be even more use cases and they'll have more constituents talking to them about the ways that crypto has changed their lives and how they use tools. What are some new and exciting ways that it's improving their day-to-day interactions with the internet, like whatever it is. I think we're trying to do a lot of work to highlight those types of opportunities, like where crypto is really making the most of a difference for individuals and make it more tangible for members of Congress. Because I think for a lot of them, it is still relatively a smaller industry. It's not like we are a traditional banking sector. So how can we make it seem like crypto is actually, like, how many people in their district have crypto, et cetera, really make it more impactful, I think, for each of those members.
Yeah, and I'm hopeful too that Congress kind of changes. I think the FDIC maybe getting new leadership might change. We might see a change in the executive leadership, and then just the regulators. And we're lucky enough. I know there's a couple of our NCUA regulators on the call. They've been very pro technology in supporting kind of the credit union industry, and we always have a number of credit union folks. It'll be interesting to see if we get similar support or with that change in leadership at FDIC on the banking side. And again, OCC seems to have taken a similar sort of view as the FDIC in the past, but that's one where I'd like to see some change, especially for community banks, because the large money center banks, they're moving ahead with their research on this technology, and they can afford to do that anyway and wait for regulation to kind of catch up and be where they want it to be. But the community banks can't do that, right? They don't have the resources to invest in figuring out all the use cases around blockchain, digital ledger technology, or smart contracts. And it feels like there's not a level playing field. So again, I'm hoping that the regulatory bodies and legislative bodies do kind of catch up with each other, and we get one good, consistent, pro technology, pro US approach across the board on this.
Yeah, you and me.
Yeah. With that, we have 10 minutes left. I want to open the floor to questions from the audience. If there aren't any questions, you and I'm sure, can riff on this for a long time, but I also want to be respectful of people's time. With that, feel free to unmute, or you can put something in chat if you don't want to ask the question directly. But we're really fortunate to have Sarah here to ask questions about, so don't hesitate to jump in there. The uncomfortable silence. You must have done a really good job, because there's not a lot of questions. Sarah, what are the things that maybe we didn't talk about that we should talk about, or questions that I didn't ask you that maybe an answer to would be useful for our audience? And again, most of the folks that either are participating in this live or will see the recording are probably community bankers and credit union executives, but we also have fintechs that are involved in this as well. We've got a couple of fintechs that are involved in the digital asset space. So what are the things that maybe you want to let them know about or talk to them about directly?
Yeah, I mean, I think for me, especially with the banking sector, I think sometimes it seems like digital assets are challenging their existing products in some ways, or I want to find ways to be able to work with the banking sector to find the harmonies of where our space can help their space. And I know tokenization, and especially of real world assets or deposits, et cetera, is one place that's a really like hot button topic right now. And I think for us, like, our members are exploring it and trying to find ways and partners who are open to the kinds of collaboration that I think are really going to help the ecosystem, not even the blockchain ecosystem, but I think our financial ecosystem writ large, really find ways to make things more efficient, make things faster, cheaper, easier to access, et cetera. And I think community banks in particular and credit unions are a place where a lot of individuals have better access to products than sometimes compared to the larger, I think, bigger counterparts. So how can we find ways to really enable them to do better outreach, to make their products more accessible, and to improve them with digital assets and digital ledger technology to whatever extent we can?
You make an interesting point, which is we're very fortunate. We live in a country where we have really great financial products, and most people have access to them. There's still a lot of underbanked, and that needs to be fixed. But vast majority of Americans have pretty good access to financial services. But that's not the case everywhere in the world, right? And I almost wonder if there's an analogy to draw, kind of thinking back to telecom, where in the US we had very good telecommunication system. We had the old, hard lines, copper lines, and we had mobile phones. But mobile phone adoption really kind of leapfrogged us to some degree in other countries where they didn't have that infrastructure. And even that led to kind of banking by phone type solutions. And I'm wondering if we might see the same with digital assets, where the real innovation and some of the leapfrogging happens in other countries, almost because we've got such a good system here in the US. And that's something we probably need to, as just, Americans need to keep our eyes on, that we don't get leapfrogged by another technology because we're comfortable with the ones that we've got, and we've got good services that work well today. That doesn't mean that they'll necessarily be well positioned to be flexible enough for the future. And I think that's probably something for all of us to think a little bit about.
Yeah, and I understand too that crypto and digital assets, blockchain, it can feel risky, but I do think, and I'm hopeful that regulators going forward, I think, open themselves up to taking a small risk approach, not a no risk approach. It feels like recently, I think we've really been aiming to try to reduce risk to zero in our ecosystem, because we're fortunate enough and have enough innovation and infrastructure and security that we don't need to take a lot of risk. But I'm hopeful that moving forward, we can open ourselves back up to the opportunity to have some risk in the system, just in controlled ways, of course, and safe ways, but still to try new things and really be able to try to leapfrog in using new technologies and find new solutions to existing problems, et cetera.
I love what you just said. The small risk approach, not a no risk approach. I'm going to use that and borrow that. I'll give you credit for it, Sarah.
Okay.
All right, so I'm going to do one more call for questions for you guys to have an opportunity to ask a very well recognized expert. And if there aren't any, we can go ahead and we'll wrap it up. But let me pause.
Hey, Larry, it's Dean. I'm not so sure I have a question, but just kind of a follow-up to a statement you made about the way we get leapfrogged in certain situations and not taking into account the infrastructure we already have. We're seeing that same thing happening on the instant payment space, which is where I spend a lot of my time. And what's happening with Pix in Brazil and UPI in India and a lot of these other faster payment solutions where they're able to make able to see significant growth because, one, there wasn't as much infrastructure to overcome, and so there was a bigger need. And then two, you had government mandates and things that were pushing it forward. I take it from this conversation, we're not likely to ever see a government mandate in favor of crypto. But, I guess if we ever did, that would be one way to move it forward. But anyways, I just wanted to kind of highlight that observation.
No, it's a good one. You and I are both on that U.S. Faster Payments Council. I think about the QR codes working group, and that's a technology that the rest of the world is very much using. We haven't adopted so much because we've got tap to go, and that's a pretty good option. But again, sometimes we can look externally for solutions that might be a cheaper, faster option.
Yep.
Well, with that, Sarah, this has been a really insightful conversation, and I appreciate you taking the time out, especially during a busy day. I don't know, did anyone see whether or not an ETH ETF got approved? I don't see anything there yet on Twitter, but again, appreciate it. Appreciate everything that Blockchain Association is doing. You guys doing great work, and I'm sure I'll see a few of your folks out in Consensus, where I'll be in Austin next week. And with that, again, thank you very much, and we'll go ahead and end the recording.
Great. Thanks for having me.
Take care.